Good morning, everyone, and welcome to the 86th episode of the Veritas Fact-Finding Series. And this morning, I'm joined by Mr. Bashar Al-Rehany. Good morning, Bashar.
Good morning, Anthony. Thanks for having me.
It's a pleasure. We designed this program in the wake of the COVID pandemic as a way to find the truth. In each episode, we go on the ground with industry professionals in an unscripted, candid video format to better understand how the pandemic will affect the future of our economy, our life, and our investments. By way of background, my name is Anthony Scilipoti. I'm the president and CEO of Veritas, which is an independent equity research firm based in Toronto, Canada. And I'm proud to say this year we're celebrating 22 years being 100% employee owned and operated. During this series, and with everything we do, we believe the truth comes from the facts and that better information leads to better investment decisions. Now, quick disclaimer, this broadcast is not to be taken as investment advice, and participants or employees of Veritas Investment Research may own securities discussed in this broadcast. While we love all our guests, and of course Bashar the most, this session it may contain forward-looking statements, investment opinions, and comments that we do not agree with at all. Now, I could go on for quite a while here and give an introduction to Bashar, but I'm going to try to keep this tight because I think Bashar's story is better told by Bashar. And what I think is very interesting, and Bashar joined our independent advisory board. I've known now Bashar for about 6 years, maybe it's almost 6 or 7 years. We met, and I'll let Bashar tell the story of how we met, but we met, and he's been a distant mentor to me in many ways. When I have questions about what to do with the business, I ask him, and he has fantastic perspective given his long history in our industry here doing research. So he was CEO of Dow Jones Markets Canada from 96 to 98, and Bridge Information Services Canada CEO from 98 to 2002. He then led BCA Research from 2003 to 2021 as CEO, taking it from 12 million in revenue to 85 million and leading to a number of mergers, including Ned Davis Research with EuroMoney Institutional Investor PLC. He's now a consultant and, of course, as I mentioned, a member of our Veritas Independent Advisory Board. So Bashar, today we're going to discuss your background, and I think it's going to be very interesting to our listeners as you bring it home to say what makes a great analyst on the buy side, what makes a great analyst on the sell side, where is our industry going, and how should those that are listening here, whether they're on the buy side or on the sell side, how should they position themselves so that they can make sure to really, this is a tough industry, so that they can thrive in it. So Bashar, take us back to your time back in Kuwait, where you started out and ended up back here in Toronto.
Certainly. Thank you, Anthony, for this opportunity. I really appreciate what you're doing. We know each other for about 7 or 8 years, as you said, and I'm always a big fan of Veritas, their independence, their rigor, and their insights. So you're doing a great job. Where do I start? I graduated in a double major, math and computer science back in the 80s. And if you ask me, did I want to work in my math degree? No. Did I want to work in my computer degree? No. And Apple came to knock the doors in Kuwait, as a matter of fact. That's where we immigrated from. And I became the first Apple salesman in those years, where we used to sell Apples 48K. The precursor to Excel was a program called VisiCalc, and used to have 48 rows and 48 columns, and that's it. If you do any mathematical problem, it gets stuck. Anyway, so first Apple salesman. That's where I founded myself. That's where I found, graduating with double major, not knowing what to do with my life. I found business development is where I wanted to be in a serious situation. Worked for Apple for 3 years. Then I was approached by Reuters. Now it's known as Refinitiv, owned by the London Stock Exchange. At that time, Reuters is still an independent news organization with electronic information financial information services, linking the stock exchanges and the commodity exchanges worldwide with the asset managers or the asset owners. I started my career there in Kuwait, and they wanted us as the kind of sort of the management training program. I went around the world. We lived in Jordan, lived in United Arab Emirates, got trained in Tokyo, in Hong Kong, in the financial institutions, and the trading floors. At that time, there were trading floors and all these big screens, and every trader used to have these 3 or 4 big major screens and so on. So I got my training there. And interestingly, whether lucky or not lucky, I think it's going to be lucky, as you're going to see why is it lucky. The company put me as a, that is Reuters, Refinitiv, as a deputy country manager for Kuwait. At that time, I was 32 years old. It was a $10 million business. It was at that time was great. In January 1990, for you on this call who remembers 1990 Kuwait,
yes,
will know that 7 months when my wife and I and our daughter moved to Kuwait in January of 1990, 7 months later, Iraqis rolled their tanks and invaded Kuwait.
Yep.
And we woke up at 6 o'clock in the morning on the 2nd of August, 1990, and airports were closed. There's no job. There's nothing. Tanks in the street, firing at everybody and what have you. Anyway, cut a long story short, I don't want to bore the people. We decided that North America is where we want to be. And we immigrated, a long story, we immigrated to Canada, where we thought Canada had the best sort of mix between North American technology and European heritage and so on. We love that. We love that space. We immigrated to Canada. We landed in January 18th, 91, 2 suitcases, 2 kids, minus 20 degrees in Montreal. And my wife said, "What have you done to us?" I said, I didn't do anything. It's just the world. Reuters gave me a job as sales in Eastern Canada for a guy who came in, not knowing the economy, not knowing what to expect, didn't speak French because we landed in Montreal, and that's the job they had. So I said, I'll take it. I took it. Seems I did very well. And they promoted me to a director of sales and customer service 2 years later, as a matter of fact, moved me to Toronto, promoted me to a director of sales and customer service for all of Reuters. That time it was like $50 or $60 million business. I had sales, installation, billing, administration, an organization of about 60 people reporting to me. And we moved to Toronto. The weather was much better than Montreal, but we still love Montreal. I still go to Montreal quite often. That's the first, city I came into in North America. Anyway, and then 3 years later, Dow Jones in '96, as you said, appointed me as their CEO in Canada. And I moved from Reuters to Dow Jones. And in a long story short, 5 years later, through another acquisition, Reuters ended up buying the financial information of Dow Jones. And obviously, I'm not going to go back to Reuters. So BCA, I joined BCA. I grew BCA more than 10 times, bought a business called Ned Davis Research in macroeconomics investment research, and stepped down after 19 years as a CEO. I stepped down late last year, thinking that, stepping down at the top of my game is much better than stepping down when, your career is taking a southern direction. So step down, and I'm board members now. I want to share, my passion now is to share my experience, to share the skill set that I've learned with, other people, such as yourself, such as other industries, healthcare, and financial services, to share my experience, to share my mentorship, that I can benefit them. And the silver lining in all of this, Anthony, is that this is an amazing place. This is an amazing opportunity. This is what we call the dream. And what I'd like to leave everybody on this call with is that if you work hard, and if you put yourself, put your mind, put the family, put everything into one place, and direct yourself, you can replicate my successes, because it's not because I'm special, it's because I just worked hard realizing the North American dream, the Canadian dream, for that matter, and everybody could do the same thing I've done.
I love it. So tell us this, what you mentioned, the silver lining is that it's possible and you have to work hard, but a lot of people work hard in our industry. A lot of people don't make it. And so what's been the key to your success in building the business let's take the last business, because I think BCA, everyone on the call will know BCA very well, and Ned Davis. What was the key there to building the team, making the acquisitions, and what drove you every day to do that?
What drives me is doing an excellent job. What drives me is the personal recognition. Coming out of the war-torn area, coming out of a place where opportunities are not equal, in how they present themselves and how you can go and grab them. Once you see that, liberty, once you see freedom, once you see the society that we live in, you go for it and you can grab it and you can take it. That's what drove me. It's the personal success. How I did it is a combination of two, in my mind, very equal factors: family and business strategy. You get the family, whether you are, any side of the family, you get the family understanding. I used to log 250,000 miles with Air Canada every year building this business.
I saw you traveling all the time when I'd go to Montreal, come back to Toronto.
So between Montreal and Toronto, the business was built, I'll tell you the strategy, but the family is, or the understanding within the family, within this unit of success is paramount. It's as important in my mind as the strategy. So that's on the personal side. On the business side, it's looking at a business, analyzing the business, analyzing the products, analyzing the market, depending on data that you have gained in the marketplace. And the most important thing, talking to your customers. Get the insights, build the strategy, build the action plan, and execute on the action plan. As an example, so that's the strategy. As an example, when I took over BCA Research, it was, what does BCA Research needs? So, as I said, this is my thinking about the strategy and the action plan. So, analyzing the market, tick. Analyzing the opportunity, tick. Analyzing the products, tick. Talking to customers. I spent the first 90 days doing nothing but talking to people and customers specifically. After the 90 days, you end up having a lot of data and a lot of information that you can put actually a business plan that you can execute with a tactical plan. The business plan, in a nutshell, and I don't want to again bore the people on the call. The actual business plan was that I came up with: develop products that are sold to the same customer. That's key. Develop products to be sold to the same customer, and service the customer where they want to be serviced globally. So the first part is develop products that are sold to the same customer, i.e., you do not go, if your market tells you and your customers tell you that there is huge room for developing products, you develop the products that is sold to the same customer, meaning you do not go and find another adjacency, another market sector, another customer or so on, sold to the same customer, i.e. there's gaps in your product offering that the customers will buy if you close those gaps. Number two, service the customer where the customer wants to be serviced. Niches. I decided to go after markets that our competitors are not there. So I placed a customer service in Sao Paulo, looking after Latin America.
Mm-hmm.
I placed a small office in South Africa, looking after the African market. I placed a small same thing, replicated the same thing in Sydney, replicated the same thing in Hong Kong, replicated the same thing in Singapore. Obviously, I'm leaving London and New York to the last because it just makes sense. London and New York, you have to be in London
Yes.
and New York anywhere. That's the financial centers of the world, and you have to be there. So that's the other leg of the strategy. And the third leg of the strategy. So we talked about the product development, the customer service, and then hiring the right people and putting the right people in the right seats in the bus internally.
And how do you do that? What's the key to doing that?
The key in
because
our
we're
business,
in a people business. This is the hardest thing.
Exactly. So in our business, I had an agreement with McGill and Concordia, being BCA being based in Montreal.
Yeah.
Physically, the head office is in Montreal. I had an agreement with Concordia and McGill to for us to look at an internship and interview and hire the top graduates from economics or finance.
Right.
Okay. And BCA, as I built BCA is built on, the data, right? It's a data hog. You look at the data and you create these relationships, that secret sauce between, creating these relationships from readily available financial information or financial data, right? And you create these series of relationships that gives the strategist the intuition to come up with an investment idea. That's basically what BCA is and the way we built BCA. Therefore, if you get somebody who has scored the highest in a finance degree, tick, CFA, tick, all of those ticks. In my mind, the key in our industry and your industry as well, Anthony, is that the love of the market, the respect of the market. You respect the financial markets. You love to be in the financial market. That will differentiate you. That's the niche that differentiates you from a regular analyst, from an analyst that's taking it as a job. You don't want to, being in independent investment research, and I specify independent investment research, is the love and the respect of the financial markets.
So let's talk specifically now about the evolutions that's happened. And we just went through MiFID II. It's still lingering in Europe, it's being discussed to some degree here in North America. What have you seen as a result of that, and where do you see our industry going?
I see MiFID II. Let's just spend a couple of minutes on MiFID II. MiFID II, in my mind, was one of the harshest regulations that governments came up with. And obviously, it was a result of the financial, as we termed it, the worst crises or the most severe crises in 2008, 2009.
Yeah.
And it was meant to regulate the relationship between the asset owners and the asset managers. That's what it meant to be. You and I, as being independent investment research, we are a byproduct of that whole idea, because we continued and independent and we charge for our research. You and BCA and all the independent research providers, you charge for the information that you send to the customer, all at the same time, being independent and all that good stuff. So the independent investment research industry as a whole was a byproduct of that MiFID II. MiFID II is behind us. Okay, and from a macro point of view, from a directional point of view, MiFID II is behind us. Asset managers and asset owners took them about 3 or 4 years to know how to live in the MiFID in the MiFID world, and the people who succeeded in the MiFID world actually did a turnaround. It was a turnaround strategic plan. Look at your business, what products are working, what products are not working, i.e. in financial terms, and making decisions based on that. Okay, the days of a commission sharing agreements and so on, it's all, I think it's all gone. It's not going to come back. Although the FCA in London, after the exit from exactly Euro, said, we think we're going to change our minds. I don't think we need it, and so on. Yet they were the leaders, in MiFID II. So to survive in MiFID, obviously independent investment research, do your turnaround strategy. That's what we've done. Analyze your products. What product is working, what product is not working, and take the hard decision. I closed 4 products at BCA that were not working well as a result of MiFID. You need to take the hard decisions to sustain and to start to grow the business again. So I'm very happy to say that the turnaround plan is working, and MiFID is behind us. But,
so you don't see MiFID coming here to North America?
I don't see MiFID is coming to North America because the SEC is there's regulations. Yep. The 28E, I think it's a Congress enacted rule. It's working well. I don't think it's going to come to North America, specifically now with the FCA kind of pulling out of Europe. It's not coming to North America. That's my personal view, because in North America we're very well served by that the exception to the rule, the 28E, which I think is a Congress enacted rule. So yeah, I don't think it's coming to North America.
So let's talk now really specifically about analysts, and in your mind and your experience, what makes a great analyst?
What makes a great analyst? It's a very, very, very tough and a great question. What makes a great analyst is understanding the data. Number one, in my mind, understanding the relationship that exists between this publicly available data. Okay, you go to Refinitiv, you go to Bloomberg, you can buy their data. S&P, whatever.
Everybody has it.
Everybody has it. Everybody, okay, let's talk macro for a second, because that's my expertise. Right?
Yeah, let's talk macro.
So inflation, you can go back 50,000 years, whatever it is, you can get a series of inflation. You can get a series of PMI. You can see, you can get a series of unemployment. You can get a series of VIX. There's so many series that is readily available. The key is you put those 2 or 3 series together to hopefully the resulting series gives you an indication to add your intuition. So data is very important. How to manipulate, how to read the data, it's very, very important. Then you move into what I said about intuition. Because if you just report on the data, then you're becoming a data analyst, right? Yep. How to take that data and learn and add your intuition to come up with the investment conclusion. That's very important as well. Number 3 is the writing skills. In my mind, who could read the data and write eloquently on the data and come up with an investment conclusion will distinguish themselves as a top tier analyst. You add to it, as I said at the beginning, you add to it the love and the respect of the market.
Yes.
You don't do it, in my mind, just because you have scored, GPA of 4 in your finance master's degree or undergrad. No, you do it because you love the market and it excites you, and you respect the marketplace. So data, writing ability, that's what I would look for. When I used to hire those chief strategists, this is what I look for. Understanding of the data.
Yep.
Academically, obviously academic, it goes without saying. Understanding the data, intuition, writing style, and the love of the market and the respect of the market, of the financial market. And to be honest with yourself. If one of your trades didn't work, say it didn't work. Say it didn't work.
Love it. Yeah, you gotta own it. And that's one big thing that we've been big on here at Veritas. If we get it wrong, we'll just say, you know what, here's what we got wrong. And we're not just going to tweak our model and come up with a new output. Let me just launch our poll question so everybody can give us some feedback here on our session. And perfect. Hit the X. Perfect. So Bashar, I had another, just if anybody has any questions, just hover down to the bottom of your screen, type something in the Q&A, and we'll make sure to answer it. Quick question for you. If so, we know our industry's constant flux. And actually, we talked about MiFID, but MiFID took out a lot of our competitors. And the capital markets industry really shrunk. Whether, commissions went down, they were already going down, but commissions went down further. Revenues from all our businesses went down on the research side, because all of a sudden there was a smaller pool to play from. And it also became very rigid. This is how much for this meeting, this is how much for this report, this is how much for this company visit, etc. So as you see, and given where do you see the industry going from here, and how should we position ourselves to make sure that, whether you're on the largely, I guess, on the capital market side, how should they position themselves to flourish here?
Another very good question. The capital markets is flush with cash. It's a fact. There's a lot of cash and there's a lot of capital being injected in the marketplace. Alongside MiFID, I think there are a couple of trends that has impacted our industry, perhaps more than MiFID. One is, I don't think you wanted me to say it, but I'm going to say it. One of them is the move from active to passive.
Yep.
Okay. In my mind, that is huge. So the move from active to passive is going from independent stocks to portfolios. And you and I have discussed that. I'm an advisor on your advisory board, and you and I have discussed that. Number two, the changes in the pension plans, from DM to DC or vice versa. Those two, in my mind, have impacted our industry more than MiFID has. So what do you have to do to counter that? In my mind, is a marriage of content and technology. What do I mean by that? The reading time of the users have been reduced a lot.
Oh yeah.
Virtual, COVID, whatever. Meetings used to run an hour and 15. Remember those days? An hour and a half, Now, meeting is half an hour.
And it's scheduled, and the next meeting is going to start right at that time. They're waiting for you. Oh, and by the way, that was in Quebec. The next one, I'm talking to someone in Vancouver. Hit the button, New York.
So the meetings have shrunk. So time becomes an essence. Number two, because the time has shrunk, your reading time has shrunk automatically with it. So the marriage of the content and technology, what I mean by that is that you've got the content anyway.
Yeah.
How to deliver it in what I call, and what we used to call at EuroMoney, 3.0. To deliver it alongside, or to become a embedded in the customer workflow. Once you become embedded in the customer workflow, that automatically will raise the reading time. So to counterattack those trends in the marketplace that we discussed, and MiFID, the three trends, you need to have the marriage between content and technology to become embedded in the customer's workflow. And that's, I think, where the future is.
Okay.
Of our industry.
Any parting comments you'd like to leave us with? You know, there's many young analysts, portfolio managers here on our call.
Work smart, work hard, enjoy life. This is one of the most interesting sectors I can think of, is the financial sector and the financial services sector. It's the most interesting. It's one of the smartest in the world. So enjoy it, have fun with it, and work smart.
Very good. Bashar, thanks for your time today.
Thank you very much.
I wish you continued success. I know that you're retired, but you're not really retired.
I'm not retired. I'm not retired at all.
If anybody's looking for someone who actually knows what's going on in the industry and with an ability to build businesses, this is someone that you need to speak with.
Well, thank you. Thank you.
So Bashar, thank you very much. And thanks everyone for joining us.
Thank you. Take care and all the best. Bye-bye.